A cryptocurrency bear market happens when the prices drop and lack of investor confidence causes the drop to be long-term, as investors hope to avoid losses by selling off their holdings. Bitcoin hit its all-time high of $19,783 on December 17, 2017, before the market turned bearish. Experts in the space, if there is such a thing, agree the current cryptocurrency bear market could last for several years, or it could end after a few months. The only certainty is that no one is certain, given crypto is an uncharted territory, with more players than bears and bulls. So what are the factors that drive a crypto bear market? In this video, we'll take a look at some of the important elements you should be aware of. Bitcoin whales. Individuals holding a significant amount of Bitcoin or any altcoin are known as whales. They hold so much that when they buy or sell, the impact on the market can cause a wave. They have the power to move prices in their preferred direction, buying or selling large quantities. When the volumes are low, all it takes is selling a couple of $1 million worth of BTC to trigger panic selling. Inexperienced investors might ask why whales would sell their Bitcoin at the bottom. Answer: as the price falls, they keep buying on over-the-counter markets, and that doesn't affect the price. Afterwards, they pump Bitcoin on an exchange to push the price up. Whale watching in crypto means you watch how, when, and where these individuals are trading. They can be as difficult to spot as actual whales unless you know where to look. Whale watchers look for abnormal changes in prices or volatility when the market is otherwise quiet, and try to go along for the ride to profit. Investor sentiment. A cryptocurrency bear market is driven by caution and pessimism on the part of investors expecting lower highs and lower lows. Holders of cryptocurrencies in this environment are more likely to sell than buy, and often mistake a price correction as being part of a sustained downward trend, selling too early. A bull market is defined and driven by optimism, and investors have a positive outlook regarding the direction of market prices. Buying is generally encouraged, and FOMO, fear of missing out, can drive buyers to jump in at or near all-time highs, and that pushes prices even higher. The last Bitcoin bear run of 2014 lasted into the summer of 2015, and the price dropped significantly. While the media reports that a lot of investors who bought high have lost money, one has to wonder if the number of FOMO investors is really that high. If not, then perhaps the current cryptocurrency bear market will be less severe than 2014. Wide range effects. Market analysts generally agree that the cryptocurrency bear market will have little effect on the broad stock market. This is because the crypto market remains tiny in comparison to the dot-com boom, for example. The dot-com internet stocks in the late 1990s represented a substantial portion of a large sector of the economy. But the sum total of all cryptocurrencies in the world today is smaller than that of just one of those dot-com companies. That said, some believe there are ways in which the aging 9-year-old bull market in stocks could be affected. Bitcoin prices rose dramatically at the end of 2017 as the economy began to accelerate. Investor confidence fueled both the global equity and crypto markets, thus a sustained cryptocurrency bear market could have an effect on overall investor sentiment. As more mainstream companies jump on the blockchain bandwagon, a crash in crypto could have adverse effects on their stocks. Just like every other market, when money flows in, the price goes up. And when money flows out, the price goes down. As the cryptocurrency bear market is seeing more fiat liquidation, prices keep dropping. However, Bitcoin has proven to be more resilient than some experts would have imagined. Many in the space are just waiting on the sidelines to time the bottom before buying. If Bitcoin can rise against a falling tide, it becomes a candidate for investment when the market turns. Wait for the next Bitcoin is dead headlines from the mainstream media, then buy. But we're not there yet. If you have questions on crypto and the bear and bull market, contact us today. And if you enjoyed this video, be sure to like, comment, and subscribe.